Ravi Kant Jaipuria, chairman of Varun Beverages, now joins us. Now, Varun Beverages, ever since it's gone public, has been one of those real performing stocks. Ravi, good morning. Thank you for joining us. Strong top line growth was led by volume recovery. Was this largely because of that GST base effect which was there last year, which is helping you?
No, I don't think. If you look at the first half, because GST effect was only in June, but if you look at our 6 months performance, I mean, we have grown top line by about 26% and our PAT has grown at close to 30%. So it's been a continuous growth month on month. I think if you look at soft drink business 25 years back, every year we have been growing. It's just that last couple of years we had a little glitch because of last year, specifically because of demonetization and GST. So I think we are back on our original base, and the company started doing well, and we're growing more than double digits on our organic growth.
You know, it's been a set of earnings which have impressed the street, Mr. Jaipuria. You've seen a good profit growth, up 25%, and you know, we can reiterate that as many times, but it just reflects the strong consumption story which is underlying the the trend on earnings for your business. Do you think that this is the kind of run rate you can sustain going forward into the financial year as well as the next, that the consumption story is very much intact and strong?
Yes, it's looking, I mean, we are already halfway through the third quarter. The business is looking as robust. There's no reason why we cannot continue with the double digit growths, and we are consolidating, as you are aware that we consolidated 5 more states this year, which is slowly getting into the regular VBL consolidation, and this will further give us higher volumes, as these are very low penetrated markets and we have huge potential to grow in the next couple of years in these territories.
Just wanted to understand what really is happening when it comes to some of the RMC. While you've had the advantage of low sugar prices in the quarter gone by, we understand that resin prices have seen a sharp spike up. What is the outlook there, and would you see any pressure on your margins because of this?
No, if you see, our margins have improved, except if you see our EBITDA has come down slightly because of 2 reasons only. One is the new territories which were very slowly penetrated, and because of that the EBITDAs were low in these territories, and after consolidating our margins have come down. Otherwise, on our organic and our original territory, our margins have gone up even. But and also the Tropicana business which we have added, as we are not manufacturing as of now, so we are not making any margins on that, but it's of course adding to our top line. So that is the only reason our EBITDA margins have slightly come down. But going forward, as we consolidate the new territories, even that will become all right, and our EBITDA margins will sustain. And we, in this, sometimes the resin price will go up, sometimes the sugar. So this keeps on happening, but unless until there is a drastic change in the whole thing, we are able to sustain it, and there is no reason that our margins will not be sustainable.
Okay. Ravi, we've never asked you this question about your relationship with Pepsi. Now, we've interacted several times, but I've never had a chance to understand your contract with Pepsi. How exactly is this contract structured? For how many years there is a commitment? How periodically, when does the contract get renegotiated? I'm just curious to understand that.
No, the contract doesn't get renegotiated. It's a 10-year contract which automatically keeps getting renewed, and this is the normal practice of Pepsi everywhere in the world. And if you look at today, VBL, Varun Beverages, is serving 1 person out of every 8 people in the world. I mean, we are practically touching one person, reaching one person in the world out of every 8 people. So that itself talks about relationship. I mean, we couldn't have gone to this level.
Is there an agreement which clearly defines that the contract between Varun Beverages and Pepsi will remain exclusive and there would be no other third vendor which would be entertained? You're a listed company now, and these are questions which investors would look forward to, that what is the moat in the business, what is the predictability in the business, and what is the competitive edge in the business?
No, but that's what it is. So they have seen with all the listed companies that Pepsi has an exclusive agreement for that territory, and it automatically keeps getting renewed every 10 years. The only thing is, unless until you do something so ridiculous which the Pepsi cannot accept, which we've been there for the last 25-30 years, so that is automatically renewable, and I don't think there is, we are both interdependent on each other.
Really getting captured in the growth.
I mean, Varun has practically 7 countries under itself.
No, I know it's a very great relationship and it's a very dependable relationship. So my next question to you is that when it comes to India, how more can you scale up? Is your contract giving you the entire India business? Is it select India business? Will the territories increase there? How is that structured?
No, you see, this totally depends on how Pepsi feels. I mean, as long as they feel we are doing a good job, they have added a large chunk this year. If you look at, close to 300 million people were added to our territory this year, which is the eastern belt, the 5 states which got added. Now it is totally up to Pepsi if they want, if they feel we are doing a good job and they feel they have more territories to give us, but there is nothing agreed or written, and this is totally their call.
Thanks very much, sir, for joining us, Mr. Jaipuria. It's been a great chat about your business. I'm very excited to see how the business continues to go from one point of strength to another. Appreciate your time.